Hey, it's Soleil, and this is episode 610 of the Orange Pill Investor. And today we're going to talk about the concept of planned obsolescence. And I don't know if this always existed, but certainly around maybe the 1950s or 60s. Like back then, you tried to sell products that lasted forever. And at some point, companies figured out that if you make a washer and dryer that only lasts 5 years, you can just sell people a new washer and dryer every 5 years. And they started to build planned obsolescence into every product. And so if you've noticed that as long as you've been alive, things get worse, even though technology gets better. It's some of this is because it's intended, right? It's not a bug, it's a feature. And I don't know if Bitcoin completely fixes this, but fiat is like the peak planned obsolescence, because if you follow uh what's the guy? Roy Dalio's cycles of empire and economic booms and busts, they expand the money supply, and then when that unwinds, they have to do some kind of money reset, global reset. One empire uh, basically wipes out all of its all of the debts that empire has accumulated, and then we get a new empire that starts to run the show. And of course, all of the elites have moved or have retained their value in hard assets. Back in the day, it was gold or property, art, all that good shit, land. And then we go from one fiat standard to the next. And I think that this is at least um, I don't know if it's just synchronicity where all of the elites follow this. Like, I don't know if they're literally having an annual meeting in some hidden room where they're like, okay, this year we're going to crash everything and we're going to convert from the Dutch Empire to the British Empire to the US Empire, whatever. They probably have their own little battles amongst themselves. So some of this, like the war is real, the war in the Middle East is real, but I don't really completely buy it that it's all just spontaneous and complete chaos. So the fact that the US dollar may get displaced, and even the US empire at some point has to be on the decline, so it might as well be now. Shouldn't really be much of a surprise. And I don't know what the whole world's going to look like in 10 or 20 years, but it's going to be a hell of a lot different than it is now. But I think the thing to keep in mind is that it's all by design. So if they crash the stock market, like, that's just a temporary thing. It's just um, flushing flushing wealth out from the people who are not in the club, and it'll all just come back to life. So, do I know what Bitcoin's going to be by the end of the year? No. Do I know what the stock market's going to be by the end of the year? No. But if they decide to tank this fucking thing, just understand that this is controlled demolition. And I choose those words intentionally. It's a call back to 9/11, which could, like, when my conspiracy theory hat gets put on and cranked up to 10 or maybe 11. I wonder if that was like the signal. And I don't know if that was um some people say it was an inside job or whatever, but was that the signal to the world, or to the US, or from the US, however you want to look at it, that the US empire is being turned over, or its time has ended? That would be a fitting symbolic uh, demonstration that, oh, okay, all the global elites, here's your smoke signal that the dominant global superpower is uh, is going to be on the decline. So get your affairs in order for the realignment. Yeah. So will the U.S. dollar still be powerful? Yeah. Maybe we go back to the Monroe Doctrine and the U.S. is just running North and South America. Uh, I actually wouldn't mind that. Uh, the whole global empire thing just puts a target on your back, and it's kind of a way to fleece the middle class and transfer wealth to to the people pulling the strings. And so that's why I'm like, I'm that's I guess I don't know if that's why I like option selling so much, is because it's always kind of hedged a little bit. Like, I don't know when they're going to pump it. I don't know when they're going to crash it. And I'm always just willing to take what the market gives me from week to week, and kind of knowing in the long run it is kind of no up number go up technology forever. But the main thing is to make sure that you don't get flushed when they tank things like this. Like, is this an organic pullback? Hell if I know. Radu posted that he was calling it was weird. He was calling Bitcoin to like 333 or 2 something, 400 and something. And then, like, oh no, I made a miscalculation. Now he's calling 50. And I jokingly said that, asked him, did he install BTC under Loki.exe? And he actually said that he had been thinking something along the same lines. But, like, is 50K Bitcoin on the table? Like, absolutely. Like, you can't even find support on the yearly chart. Like 60. Okay, there's weak support at 60. You have to go to the 5-year chart just to find some decent freaking support under current levels, and it's literally 50K. And if we're going to go to 50, you might as well flash crash to 40, 45, which is the next level. So would that suck very bad for me personally? Absolutely. That would definitely put a bind in my ability to generate profits, because my entire portfolio would probably drop in half. And so the premiums that I could generate from that would be about half. That's It's not a hard calculation to figure out. So hopefully that doesn't happen, but it's definitely possible. And we still have a few hurdles to get through. I guess Trump and China have to meet a bunch of times to figure out how to chop up our taxes. Bitcoin has to get through the spam war. That'll get resolved in September, October-ish. Unless the spammers decide that they want to put together their own user rejected soft fork. If they do that, I guess there's a last gasp about whether that is successful or not. And even that is assuming that the user activated soft fork or the miner activated soft fork are successful. And then if that happens, I don't really think the spammers would be so motivated to actually hard fork the chain, but they could. And so I'm guessing the Bitcoin takes off maybe once this is resolved, September, October-ish. I wouldn't I wouldn't mind a nice Uptober to go along with a successful reduced temporary soft fork activation. That's my Christmas wish, I suppose. And then maybe we can get the all-time highs that we really thought we were going to get. You know, when we hit 120, 125. And everyone's like, all right, we're so back. We're going to 150, 200. You know, there were calls for 1 million. Like when people are unironically calling for 1 million and then we hit 125, like that's an order of magnitude less euphoric than people were expecting. So wouldn't surprise me at all if once all of that uncertainty is out of the global market and that spam uncertainty is out of the Bitcoin network, that we can hit new all-time highs. And really, even if I don't get my wish and the reduced temporary soft fork fails, at least Bitcoin will have decided what it wants to be, and we'll know the direction of the coin at that point. I wouldn't like it, but the network would probably just be happy to put it behind us, I guess. So same thing happened after the block size war. I don't think SegWit was the perfect solution, and you could even argue that it set us on the path of this war because of the vulnerabilities in SegWit and Taproot. Basically enabled spam in the first place. But yeah, I I hope Bitcoin fixes everything, but I don't know how long it's going to take. And I'm still pretty confident that Bitcoiners will continue to make sure that Bitcoin succeeds out at, if not for altruism, but out of their own self-interest. So, with all that being said, I think the important thing is not to take so much margin that you get a call and you get flushed out of your positions. You don't want to get shaken out of your long positions. I think even Saylor says, look, take unsecured or debt that's not tied to Bitcoin's price. So you can get out a second mortgage, a HELOC, credit cards, any way that anyone will give you money, not be liquidated if Bitcoin crashes 50%. Those are all the safest ways to leverage your Bitcoin. What's up, Sandeep? Got off a few strategy December 28 long 275 calls, short the 175, long 140 puts this morning, $9 credit. You said you closed them for a credit or you opened them? What's up, Buffalo? Here's a new pod pitch, quant hose. I think there's demand. That's a good one. I'll have to take that under advisement. There was I used to send a weekly letter or like email to a group of my buddies, like with a summary of everything that I invested in and whether I was up or down for the week. And at some point, I think I went on vacation and I just stopped doing it. But I called it weekly options thoughts. And back when I was on Clubhouse, I was in an option trading group. And on Saturday mornings, I was like, weekly options thoughts. I was like, thoughts could be considered like thought of as a pun for, those hoes over there. And so on Saturdays, I would make this a Clubhouse group, and I called it think I call it Weekly Options Thoughts, but I spelled it THOTS. And I got in a little bit of trouble for that one because somebody got pissed off and thought that I was being sexist or whatever. So they came in and were like white knighting and shit. So that was fun. But Quant Hose, that's got a ring to it. Nice ring to it there. Damn, going for 14 now. So you opened it. Oh, okay. So you're already red. All right, so strategy is coming back down to earth. And it's already making me regret the strikes that I rolled out to. I didn't get whipsawed too badly because I think when I had the 140 strikes and it went to 170, I think it cost me about 30 grand to roll. And I kept, 20 grand by rolling out for 2 grand a pop. So I really only capped my upside by about 10 grand or $1,000 per contract, which was nice. And this bad boy is already out of the money again. And when I say, that's nice, like, this doesn't make me happy that the price is coming back down because my account is down 5% overnight. Like, to a certain extent, I want to get wrecked every time I sell a covered call because I'm going to capture all of the call away value plus the premium. Now, granted, sometimes you have to deal with shares getting called away, but anytime your covered call doesn't get threatened, you've kind of left some money on the table. And so I think having to deal with your strikes getting breached or threatened fairly regularly is just a sign that you're doing it right. I know um, not just new option sellers, but I know a lot of option sellers. They don't want any of that smoke. They don't want, everybody wants to know what delta can I sell and never have my shares called away. All right, hold on a second. I gotta take this. Old lady, my old lady didn't know I was recording. Just in case it was an emergency. Luckily, it was just about sandwiches. All right. Yeah. So I think this is not only should be expected, right? Even the 10 deltas that Hermes likes. I mean, you should expect to get a little bit of heartburn, you know, 10% of the time. If you're rolling those, well, he rolls them weekly, I think. But, if you're rolling every month or, that's every, at least once a year, you should expect to have to go through uh, this experience. And, but you're also not always, I guess I'm minimizing this to a certain extent. And the fact that it has come down really is just random luck. Because if it was like March 2024 or November 2024, this could have just gone to 500 and then like these things just got destroyed and they never came back down. So that's always possible as well. But yeah, you know, I would have been even happier if this stayed at 170, 180 because, I'm down 5% overnight just since yesterday. So like I want my covered calls always to be kind of like unsteady and being challenged, I guess. What's up, Pete? They are a bunch of thoughts. Manage my rect calls to unlock upside, and of course that was the wrong answer at the time, but I wanted that upside runway to be there. Yeah, the exercise that I went through the other day is kind of calculating, whatever you think the maximum upside is on a particular time frame. Like, let's say that I thought this could run to 250 in a month. That would be, me selling these 160s. That would potentially put me $90 in the money. And that would mean that it would cost me 9 grand per contract to prevent shares from getting called away, which would be $90,000 on 10 contracts. Now, if I had shares called away at 160, let's see, calculator. 90,000 divided by 160. That would mean like half of my shares get called away, and I could use the proceeds from that to prevent the other half from getting called away. But the other way to look at this is I would need 562 and a half shares to protect 1,000 shares from getting wrecked on a move from 160 to 562. So if you thought, okay, you know what? I want to make sure I never dip below 1,000 shares, then I need to carry basically 56 shares for every 100 uncovered, which would mean I would have to have like 1,500 shares and then sell covered calls on 10 of them. And then if 250 a share is my worst case scenario in a month, then actually it's going to be less than that, because I'd have to come up with 90 grand. And if we move to 250, I would have those uncovered shares at 250. So 90,000 divided by 250. Okay, so I'd only have to actually have 360 shares. So I'd have to have 36 extra shares per 100 shares or per covered call contract to insure to the upside 1,000 shares. So this is kind of the exercise. And if you thought, okay, well, this could go to 400, then maybe you'd have to carry like 500 shares extra uncovered. And you can make it easier on yourself by choosing higher strikes. You can make it harder on yourself by, uh, selling lower strikes like I've been doing lately. But you can also carry some long calls. So I've got, 50 delta. It's probably enough to cover a couple hundred shares. You can carry Poorman's covered calls. That would be some leverage. Or if you just don't give a shit, you can just sell covered calls on everything and deal with the consequences. Hope you're doing good, Soleil. It's going to be a fun couple of months ahead. Yeah, I think so too. Um, I think it does get worse before it gets better. I hope Radu is wrong that it goes to 50. I would, I would like, I really wouldn't mind if we kind of coast in between 60 and, you know, if we just like range between 60 and 80 until September, and then they can pump this shit for the midterms, I would be fine with that. But if he's right, even if it does crash to 50, that just means the springboard is higher. Like if if we range from 60 to 80 and then pump in 2027, like maybe we get to 250,000. But if we crash to 50, I could easily see us 10xing from 50 to 500,000. So, you know, maybe you should cross your fingers and hope for the big crash. Maybe the springboard, maybe we spring off of that higher. I don't know. It does seem like the nation states are going to be in a war for Bitcoin. So, what is that going to do to the price? That's got to have an insane effect. Like countries just printing money to buy Bitcoin is has got to do something unexpected to the price at some point. So, we'll see. All right, so now I did get whipsawed on this bad boy. Um, I was even mentioning it yesterday. I kind of regret rolling this all the way up to the 170. And my fears were realized because I think it probably cost me 3 grand. I got paid 1,300 here. So that was like 1,800. So I probably did lose 1,800 bucks on this. And now there's only 90 cents left for half a trading week, which prorated out is 180 bucks for the week, which is 1% of the underlying's price. So it's not like it's not terrible. My only recourse to try to capture a little bit extra money would be to roll to the expected move for a credit. I could pretty much double my money if I want to limit my upside to 165 instead of 170. So I'll just give that a shot. I'll just tempt the market to whipsaw me again. Oh, let me resave or reshare without volume. There we go. Okay, that did not fill. So if the market wants to run this back up to 170, feel free. I can't even get a fill. There we go. The 30 DTE, now that these are out of the money, I don't have to do the intrinsic value calculation anymore. Let's get rid of that. So 100% of this is extrinsic, and it's been on for 8 days. I've captured nearly 50% of it. So in this sense, I could potentially roll this out for a week or two, but I will probably not be able to take these off for earnings, and because I just won't want to pay the debit. I did take out like 3,500 bucks to pay bills, so you can see this credit that I had built up is all gonna go bye-bye. Yeah, I could roll to here, but this is the expiration date that's got good liquidity. So I will probably wait and roll out to June 18th everywhere that I possibly can. So I really don't want to roll like now and then have to roll again next week. But really what I would really like to do is get myself back into a position where I can start rolling the very aggressive weeklies again. I only rolled out to a month to avoid paying the debit on the roll. So I know that's like playing with fire. And oh, that was the other thing I meant to say about fire. I mean, everybody knows there's a war in the Middle East, but there's refineries on fire all around the world. There's refinery fires, and like refinery fires are not uncommon to begin with, but when they happen in the middle of a global energy crisis, it seems a little bit too convenient. But we got refineries on fire in the United States. India's got one on fire. I think they were about to do ribbon cutting and go live. Um, there's refineries on fire in Russia. I think there's a refinery on fire in Australia. So this shit just reeks of manipulation. So just be careful. Just be careful. That's all I'm saying. Physically, like with your actual life, and with your portfolio. It's not financial advice, but it's um, survival advice. All right, so if I get a chance to roll this, like if I roll this, let's see, I would have to take a haircut because if I want to roll just the next week, I could get like $500 maybe this Friday. If I rolled it there now, I could get like $700. Um, but the closer I let this, I mean, I could just turn these into weeklies by just hodling them for 30 days. But that's also possible. Let me see something. So I got the 30 DTE 160s are 1250. 160s are 1000. Is that the one I just looked at? That's the one I just looked at. 900. Yeah, see, these are not going to drop in value that fast. So I got to decide if I want to just bite the bullet and roll. What would that cost me to roll to the weeklies? $600 a pop, about 6 grand. That is a tough sell. All right, Tesla, same. This one's slightly in the money. Still got $1,700 worth of extrinsic value. So nothing really to worry about here. Synthetic covered calls in a similar situation. It's a little bit better off because it's a 400 strike. But another week or two to roll those. Looks like I'm not going to get my wish to be able to remove some of these positions, especially if I need to generate 6 grand to pay for those rolls. I'm going to need Cypher to rebound. But every 2 to 3 weeks, I'd like to roll some of these for a credit and then close some until maybe down to 20, certainly under 40 contracts, but maybe down to 20 would be optimal. Just to kind of get ready for them to tank the fucking price over the summer or do some kind of shady shit. All right, the IRA. Plenty of time. So this one This one's going to be the interesting one because I sold these covered calls 23 days ago. So that would have been on April 6th. What was Bitcoin's price on April 6th? I think it was right before the run up, right? April 6th. All right. So that was 127 on the 6th. And I took, let's see, it jumped here 2 days after I put that trade on. It jumped again here on the 14th. It really jumped on the 17th. And then again on the 22nd. So I put this bad boy on and then it just went against me. It's been running against me the whole time. And now it's kind of coming back down to earth. And so as far as time is concerned, this is like ready to roll. 23 days to expiration is perfect. But it's still got a ton of extrinsic. Oh, so I should do the calculation first. Yeah, it's got $800 worth of extrinsic value, which is more than when I sold it. So even though it's been decaying due to theta, because the price has gone up, it's actually added some extrinsic value. So what would it take if I roll these out 2 weeks? I'd still have to roll to the 150 for a $200 credit. I don't really like that idea. I could roll it up one strike, 2 strikes for a break even. Or I can just keep holding on. And maybe I even hold and turn this into a weekly. I can't remember. I think I was doing one weekly and one 45 DTE before this happened. So maybe that'll be what I do. I just turn these back into weeklies and I roll one out and I turn the other one back into a weekly. I bought one lonely little share with my extra premium. Isn't that cute? I'm going to hold this leverage for as long as I can stand it. And the 160 might be easier to roll. Actually, maybe not, because a safe strike to roll to here would be about the 180 strike, and a safe strike here, same, 180. So if I roll these to 180, that would not be for a credit, I don't think. Yeah, for a debit. So I will let these cook a little bit longer. The only way that I could really roll these for a credit or a break even would be like maybe if I took profits here and I rolled this up to the 125 strike, I could capture 2 or 3 grand maybe with that move. And that would pay. That would pay the difference for me having to roll this up to the 180s for a debit. I'm not really inclined to do that. So I'll probably let this go another week or two as well and try to roll this at the last minute. Strive. I got assigned at $17 a share. Current price is 14. So down $300 on each of these positions, except I kept like $1 of premium selling the put, and then I captured probably another 65 cents of premium selling the covered call. So maybe my true cost basis is 15.50 somewhere along the line. 12 cents left. That's not much. Prorated out for a full week, that's still 24 bucks, a little bit more than 1%. So I could leave these as is, but let's see what happens if I roll the strikes down. Inside, basically to the expected move, if I roll them to 15, there's a little bit of upside left. I could pretty much double my credit. Why not? If I get whipsawed and I end up having these called away at 15, that would be at a loss. So I know some people really try to make sure that they only roll this out to their cost basis. The only way that I would be able to do that is if I rolled out to, monthlies. Could easily find some meaningful premium at the $16, $17 levels. But for the most part, I just don't care to bother. Care to bother or bother caring? I can't remember. All right, Buffalo says, I think we may see 60 again, but not much lower. God help them if they're going to make me be greedy when others are fearful. What's up, Chad BTC? Last week was the first time my covered calls were on the money. You mean out of the money? Glad I didn't get scared and buy them back. Congratulations on not panic rolling. I'm gonna have an episode called something along the lines of short dated option selling is actually low time preference. I might have covered something along those lines before, but I just listened to Seyfedina Moose's most recent lecture for his Principles of Economics series, and it was about time preference. And I was like, oh yeah, I got to talk about this one. But yeah, I think option selling is the best way to get into options trading. It's a high likelihood of success. You're reducing your cost basis, so you're always giving yourself a discount. You're always reducing your cost basis, and that's just going to give you higher chances of success. And then once you gain that kind of confidence, then you can start dipping your toe into the leverage game and buying calls. And then you've got the what is it? What's it when you've got a base? You've got a solid base of understanding of this is how I take advantage of option buyers, and then you're less likely to get sucked into the like buying weekly calls and buying expirations 2 weeks from now, 4 weeks from now. Um, Josh Mandel did a good bit of that, and I think he was successful buying, I don't know, like 30 to 60-day calls. He saw something in the chart or something in the market, and I think he printed some money with some of those back in 2024. I don't really know if he made any money in 2025 doing that, um, or if he was sitting on the sidelines altogether. I know he was down on strategy for a while, and oddly enough, he was down on it when it was going down. So maybe he was right, but I don't have those kind of skills really. So I just kind of try to avoid as many pitfalls as I possibly can. I think somebody like him can take positive advantage of things that he sees, whereas with my skill level, I don't take those types of risks most of the time, and instead mitigate and minimize my chances of failure. So he's probably optimizing his opportunities to hit home runs, and I'm trying to minimize my chances of striking out. I would love to be able to trade on that level, but what are you going to do? All right, so this one, break even here. This is long-term leverage. Stretch and SATA are my, actually, I may have to sell a share. Oh, no, my maintenance excess was negative earlier, so we must have been dropping. So I was thinking I was going to have to sell my last remaining share of SATA. Still holding tight. Wow, we're at par. So Strive is probably buying some Bitcoin this week. That's good news. That's good to see. You love to see that. Ex-dividend date is 5/1. So we'll probably put our dividends on the books tomorrow. If you buy tomorrow, I think you're good. I double check. I don't really know the dates exactly. It used to be, I thought the ex-dividend date was the day before the record date. But recently I've been checking, and sometimes the ex-dividend date and the record date are on the same day. So if you're cutting it close, just double check and make sure you're capturing your dividends if that's what you're into. If you're into those kind of things. Yeah, I'm red on this position, so I'll just hodl through that one. Red on these cash secured puts. And normally I would just run the wheel in my Robinhood account since I'm not using margin. But since I am collateralizing these cash secured puts with preferreds, I don't want to take assignment. At least not for now. I'd have to take off a bunch of these Cypher cash secured puts in order to get the options buying power to actually own some shares. And so for now, I'm just trying to maximize the efficiency on the cash secured put strategy, double dip by holding prefs, and then as I capture premium, just open up more and more positions. So even if this costs me $100 to roll to the 14 strikes, that's probably what I will do. So nothing to do there. Now this I love to see. I really hadn't looked at this too much. Every single one of my accounts finally is green this year. Up until about 2 weeks ago, most of my accounts were just red all fucking year. Like February was pretty bad. Wow, I actually dipped below my 5K. I started this as a 5K challenge in 2024, and it did pretty well, but then I was just leveraged through 2025 and everything kind of shit the bed. This was pretty bad, February, but kind of recovering nicely. But the good part about this year to date being up 20% is I started doing running the wheel 45 DTE with my brother-in-law, and almost every single one of those positions has been a winner. We finally got assigned some Cypher shares like a month ago, and that was the first losing position. That was the first time he had sold a cash secured put in 4 or 5 months and actually been assigned. We were able to roll for credits throughout, this entire period. And so I think that's what allowed this particular account to actually make some money this year, even though strategy year to date is barely above break even. What's Cypher year to date? Okay, 13%. So if I had just held Cypher all year and done nothing, I'd be up 13%. And based on my running the wheel, I'm up 22%. Now, granted, I ran that not just on Cypher, but Strive. I've got some strategy positions. I have Riot. I've traded CLSK. Traded what are the other ones? I couldn't afford. What's that other AI mining stock? It was like 40 or $50 a share earlier this year. Anyway, I used to trade it in my IRA, I think, but it's too expensive for an account of this size. But anyway, this strategy has weathered the ups and downs of this bullshit this year better than doing nothing. So that's good news. All right, so with that being said, the $15 call looks safe. What did I sell that for? 60? Okay, that's fine. CLSK put probably would get assigned on Friday. Cypher $16 call is still upside down. This is the one that we put on and immediately got wrecked. So this may get called away in 2 weeks. Remains to be seen. Unless we're trading around, if we're trading around 16 or the 17 that we're trading at now, that would be about $1 of intrinsic value at expiration, and we could probably roll for a credit or at least a break even. So we may pursue that instead of letting these shares get called away. If we can avoid paying short-term capital gains taxes and having our shares called away in under a year, I'd like to try to do that if at all possible. Riot put not too much danger in getting assigned on this one, so we'll just hang out. Well, that's right. I put on a Strive put. I can't remember which one of these I put on with my brother-in-law. One is his and one isn't. I thought Riot was his, and so then I must have had $1,200 in cash to put this on. I don't even remember. Yeah, nothing I need to tweak here either. Let's see. Can't get with Josh straight up calling Sailor a fraud. This dude can't abide. Let's see. They changed the settlement from T+2 to T+1. Always owned before the XDiv, and you're good. Thanks for the clarification on that one. Yeah. Yeah, Josh hasn't been very consistent. And yeah, and some of those criticisms were a little harsh too. Now, granted, I did say he Sailor's. It does seem like Sailor's lying about believing that fiat and Bitcoin can coexist, and then there was those clips of him talking about DeFi and like Ethereum and Solana, and like there's future and building stable coins on top of. I can't. You know what? Before I speak out of turn, I don't remember exactly the right quote, but some of those are eye-rolling moments, which is disappointing because I literally owe the final nails in the coffin of my orange pilling to the 25 hours of Sailor on the Breedlove's channel, What is Money? I've watched I've watched that series from start to finish at least twice, and like just the historical parts of it is fascinating. And sometimes I even tell people, like, if I'm trying to orange pill somebody, sometimes I'll just tell them, you know what, watch that series, because if you're not willing to listen to 25 hours of that shit, you're probably not going to get it. And if 25 hours of Sailor talking about it's not going to do it, why am I going to waste my fucking breath trying to orange pill you? Like, you kind of have to orange pill yourself. And that may be a good lesson there too. Is like, I've gotten a couple of people to buy Bitcoin, but I don't know if I've necessarily orange pilled anyone. And I don't even know if it's possible. But anyway, I got a little off track. So some of those comments from Sailor does raise some hairs on the back of my neck. But to call the strategy that they're employing fraudulent, I think, yeah, that's excessive. But he's clearly, you could say he's outright lying, or you could say he's politically dancing around the truth, or having to basically go along to get along when you're a part of a publicly traded company. So I understand if that's the reasoning, but it doesn't make it sit completely okay with me, which is one reason why I think a lot of the toxic Bitcoin maxis distrust the suit coiners, because they're legally responsible to the shareholders, regardless of whether that's telling the truth about every aspect of Bitcoin. So there's definitely room for criticism, and we should be kind of always be watching our backs and making sure that Bitcoin treasury companies are looking out for our best interest. But yeah, some of those criticisms definitely go too far. Yes, it was Iron. Yeah, I think I exited all my Iron positions. What's it doing? Probably pumped and came back down to the earth as well. Yeah, we hit 50. We were 60 in January. So we hit 50. Now we're kind of coming back down to earth. What can I get? Can get about 4% for half a week. That's ridiculous. Put up 4 grand on a cash secured put, get paid $1.72. That's kind of wild. During the height of the GameStop trade, I think I was selling cash secured puts for like 10 to 20% of the underlying price. Oh man. And not all of those trades were even profitable. That's how far it could fall. All right, so 10% would be $1.60. So it's like 3%. Not quite 3%. 2.5%. Oh no. 48. 3 times 16 is 48. Yeah, basically 3% on a cash secured put for half a trading week. Yeah, the iron is paying. Iron is paying up big time on the options prices. Hmm. Kind of feel like I can't help myself. You know what? What's ASST paying? on this move. 3%. What about on 37 DTE? Let's go to the 35 strike. 10-to-1 credit to collateral ratio. I kind of can't help but make this trade. All right, that puts my cost basis at like 41 bucks. Not bad. Yeah, I don't like the DeFi talk, but that is how a billion people can take advantage of STRC. Yeah, I'm trying to make allowances for that as well because if the millions, probably hundreds of millions of people that are, living off of inferior fixed income products get Stretch and SATA and the other preferreds as well, and you know, basically end up having more money in retirement, then you can't argue that it's a bad thing. It doesn't really make sense for Bitcoiners because we want the moon. And it could ease the pain of this transition to the global reset as well. Maybe it'll help fund some kind of way for people who are losing their jobs to AI to, like, I don't know. I don't know. That whole AI disruption has got me nervous. Like, in the long term, it probably ends up working out better for everyone because everything's going to get cheap. But, like, doesn't matter how cheap it is if you literally have no income whatsoever. So that's a little scary. All right, we are all caught up. I appreciate everybody for tuning in. Be good, Joe.